But
Hey, what's
Tom,
up, gentlemen?
welcome,
Thanks for having me
welcome.
on.
Dude, we're excited, dude. I've heard Mercy speak very highly of you guys. I've been watching personally myself, just kind of building up hype. I think I'm really interested in this conversation just to get a better idea of where Sora is. I think you guys have been a little bit kind of quiet about plans leading up to this point. So really excited for this conversation.
Yeah, I think the most important thing from our side is just you don't want to oversell yourself. You want to kind of shock the market a little bit. So building up a kind of a repertoire of businesses and good products that we can launch through SOAR has been kind of our focus. And also like recruiting the right people. We've had some really great conversations with y'all, with, like you said, Mercy. We brought on Nick last week, which was a huge ad. He's been phenomenal so far. So just trying to get the right players in place. And then, like I said, I mean, Launchpads, to be honest with you, we're really, I kind of put ourselves more as an accelerator, but Launchpads in general are commoditized at this point in time. So it's more about bringing value to the market and showing people what you can do that's different. You have to kind of have some weird edge in the space to succeed, I think.
Absolutely. Maybe Tom, we'll start off by tell us a little bit about yourself so we can understand, the people can understand your background, kind of what gives you the passion to start this. You call it an accelerator. Um, that is
Totally.
SOAR.
Yeah. So, unfortunately, in a past life, I was an attorney. I hated being an attorney, every part of it. Did everything I could to not practice. But the one thing I did while I was practicing, I worked with a lot of startups. I really loved working with early stage companies, had a lot of fun. Used to take horrible cuts on my fees to work with startups because they didn't have a lot of money and kind of progress them through documents and just go into market and things like that. So, have a lot of experience in that space, worked in marketplaces a lot, had a pretty large marketplace acquired in 2020. And that was primarily focused on software. But once again, dealing with early stage stuff has kind of been what I've done my entire life. Still licensed, don't practice anymore. Anytime anyone asks me for any legal advice, I avoid that like the plague. And yeah, we've been working on SOAR for probably coming up on 5-6 months now. I think there's a huge opportunity. I've been in crypto since 2017 and super passionate about kind of doing what we all thought was going to happen 10 years ago. And now we're here where I think ICM is finally doing what we wanted to so long ago.
Can I ask about your background? Being an attorney in this type of a vertical of crypto, I think would have some advantages. And the other marketplace or launch pads, sorry, they're more like just like startup founders or crypto background. Do you think being an attorney has a specific advantage in what you're trying to build?
I think from what we're doing, number one, I mean, it is a tough thing to become an attorney. So you definitely get a little bit of edge when you're talking to these teams for the first time. I think most importantly for us, we're trying to structure things radically different. We want to completely change how tokenomics work, how we view tokens in ecosystem. And I think what a lot of people are trying to do, which I'm hoping that we get right for the first time, is essentially taking away where you have equity holders on one side and then token holders on the other side, right? So with like, I always go back to Uniswap. Like the Uniswap shareholders make like $100+ million a year. Token holders have not received one single dollar of any of those fees that go back to the shareholders. And it's just like a complete misalignment, right? One side does not want to give up any of that value. The other one is begging for that value. So we kind of got to put those two worlds together. Regulations get in the way a lot. But I think we're in a new age, in a new era here, and I'm pretty excited to see what we can do with DRP and things like that.
So, great answer to that question, actually. So you've been building for like 5 to 6 months. You mentioned you started building, and I feel like back then ICM was so early. This like the idea was just relatively new. So walk us through the opportunity you saw when you first started building versus the opportunity that you see now. Has your vision changed? Has your approach changed at all?
Yeah, totally. So when we first started doing this, we were basically of the idea that launchpads were still kind of early at that point. We were looking at different opportunities to kind of give some type of edge to the companies that came on board and launched through us, right? You could see like when Pump was doing everything they were doing, some of these other launch pads, obviously Bonk had like a huge run there. And it was pretty interesting because realistically, what was the edge between those two? Pretty much nothing, right? Like they were just launching wherever it came on their platform. I think even like the later launch pads, to be honest with you, there wasn't a lot of curation. There wasn't a lot of recruiting. And really what we felt like early on our edge would be was talking to early stage companies, actually bringing them on the platform and delivering value. Nowadays, I mean, ICM is fucking huge, frankly. We're super excited because Salon has leaned into it. We've spoken very in depth with them about what their vision is for the future. And I think a lot of people are just either you're into ICM right now or you're completely missing the mark because, like I said, we've been trying to do this for so long. This isn't a new idea. It's not a new concept. ICM is just a new term for what we were literally trying to do in 2017, 2018. So very excited for that. I think we're finally getting to the right place where utility and actual value in tokens matters a little bit.
And a question that I had, real quick before you go, Dom. You mentioned that ICM is huge right now, and you mentioned the direction that Solana is pushing. Solana is pushing ICM towards. I mean, from our standpoint, from my standpoint anyway, it feels like we're early still to this sort of wave. Like there are a ton of players, there are a ton of new launch pads coming out, new mechanisms being built, new ideas being explored. So what makes you say that ICM is big now? And do you feel like we're still early for this opportunity, or is it something that's kind of run its course a bit?
Way early to the opportunity in terms of the broader market. I will say that how I say it's huge is when you actually talk to the people that matter, yourselves, Mercy, like I said, Solana, the foundation, everyone over there. A lot of Kyle Samani's talking about it a ton now. It's like literally everyone on one side is broadcasting where the market is going. And then trenchers are just like, let's trade meme coins more.
Isn't that funny?
It's the funniest, like, it's the weirdest separation I've ever seen in crypto. It's kind of like, and I'll equivalent it, which ICM in my book and RWA are kind of the same thing. I think that both terms are kind of synonymous. ICM I kind of put in my head as more early stage startup fundraising and things like that. And then RWA is obviously just real world assets in general. But it's kind of the same exact thing, right? You have literally like Larry Fink, BlackRock talking about tokenization, and everyone's like, oh, all these RWA coins are shit. Like, let me not even touch them. So like, it's just a market opportunity and a market inefficiency in my book. So I highly recommend people take advantage because it's not going to last forever. All these big players, people that matter, people that move markets are telling you where we're going. Yet people want to, like I said, big memes. God bless them. Welcome to crypto, and that's why there's still an edge, frankly.
I mean, I'm not sure if you saw Robinhood has been just talking about RWA recently too, and their interest to kind of get into that niche and category. It's so funny. Like you just said, everyone is broadcasting the next wave, where we're headed to, the direction, yet so many are missing it because they're too busy rotating into, like you said, the next meme. But maybe you can convince people to get on the ICM boat. So I guess that's kind of like what this conversation is about today. Maybe we'll start by learning a bit about SOAR. Can you kind of tell us the premise of SOAR, what you guys are aiming to build here?
Yeah, so really the heart and soul of what SOAR is like I said, we call it an accelerator. And when I say accelerator, I mean because we're curating launches a lot more. I've spoke to a bunch of people and they're kind of sick of like this like permissionless launching opportunity where everyone just comes and then like you have to do 12 hours of DD to figure out if it's a real company, right? It's kind of frustrating. Buyers should have some knowledge of what's actually launching. So we do have a permissionless side of the product, but the focus of really what we're trying to do is bring companies that we're talking to that really want to fundraise, that really want to come on chain for the first time, bring them on chain for the first time. And additional to that, the other side of things is that we're using a new token standard. So we call it DRP. It's a digital representation of participation. And essentially it's a patent pending idea. And what we do is we're trying to give intrinsic value and align token holders and the team themselves to be one of the same, as opposed to, like I said, these two competing adversarial opponents when a token launch happens. So kind of the light topical breakdown of it.
We have a bunch of slides that you guys kind of shared. It looks like these are like first time slides. So as we kind of go through these, maybe you can just break down what we're looking at, what this means. Like this first slide Josh has pulled up is talking about market inefficiencies. Can you tell us why this is something you guys solve and why it's important?
Yeah, so a lot of these companies, we were just talking about this, it's kind of a funny thing. So like I said, I've worked with early stage stuff for a long time. I've had one company specifically that had really good revenue. We could not get it acquired. Like we were so sick of running the business, frankly. We wanted to move on with life. I was getting older, was getting married, and I was like, let's just move on with life and get rid of this. We can sell it, maybe take a hit on Val, but let's just get rid of it. It was just a company that for some reason, like we could not find a buyer for, right? It happens a lot. Like as an early stage, if you're a seed investor, most companies never go public. Most companies' shares are never actually liquid at all. A lot of times either they get acquired and you get paid out, or they die and that's the end of it, right? Or sometimes you have like dividends that pay you out your investment. But the private, like early stage market is so liquid. Even later stage isn't really that liquid, to be honest with you. So we're really focused on pitching to not only companies, but a lot of VCs in general to give themselves more liquidity earlier on. If they want to move out of positions earlier on, we should be able to do that. On-chain is the best place to do that, frankly. It just comes down to valuation, right? If their valuations are taking a major cut by going on-chain, they're not going to do it. So really got to try to find that balance between fair val, liquid markets, and attracting the right talent to actually do that.
And I want to touch on this real quick because we've had plenty of launch pads on the show. We had Street not too long ago. We had ZC the other day, both of which are taking kind of different routes. How are you approaching getting these VCs on board and going to pitch? Are you actually going to San Francisco, going to China? Are you cold DMing? What's the strategy look like there?
So right now, our main way of actually attracting startups is primarily through our network. We have a pretty robust network. We were just in Singapore. A couple of my teammates are still over in Asia right now talking to startups. It really just comes down to finding people that have like family offices, like you said, VCs, going to them, giving them a reasonable pitch of why they should do this. A lot of times, frankly, from what we've seen, a lot of these companies are really interested. You'd be quite surprised at how open these companies are to actually coming on chain. You just have to make sure that the pitch makes sense for them. We're not trying to fuck them. We're not trying to, blindside them with some opportunity that doesn't make any sense, right? And I think that's unfortunately, like when I think about some of the other launch pads and how they do tokenomics and things like that. I was on with Bobby and he was like, Bobby's such a good dude, right? But he was laughing because he's like, I've spent like 7 figures buying back Duke token, which I like launched by accident, frankly. And so like, that's kind of touching to me because we're trying to make sure that does not happen, right? We want to make sure that these companies that are, whether they're early stage or a little bit later stage, they're in a position to succeed. And I think that one thing we always go back to with ourselves is like flexibility. And that's one thing that we're trying to offer to these startups. And that's what they love so far. So one thing is that we give them essentially interest-free debt. So we can explain that a little bit later, but the companies that launch through us get interest-free debt that they can pay back whenever. And the second thing is flexibility. They have the ability to use a liquid market when they need to. They have ability to fundraise further. The token does not become a life sentence for them where they cannot ever do anything else with their product, right, or the company. And I think that happens all the time, frankly. If you launch a token, you have 90% outstanding or 100% outstanding, whatever the number is, right? It's very hard to raise another round because people look at your token and they're like, well, that's the valuation the market already valued for you. Web3, you don't have tokens to sell them, and most Web3 investors want tokens. So you just kind of box yourself in, and like that's the antithesis of what we want to do with SOAR.
Yeah, first of all, I gotta say, yeah, Bobby Goschel is such a legend that he's becoming
Yes.
a gen like we are. Like to see him do OTC deals for Kled, and I don't know what else he had bought, but he had bought some other stuff for the Duke Treasury. Is just great. Also, his timing is immaculate. I don't know if this guy was a trader in his past life, but he is pico bottom on all these.
Is he?
Token. Yeah, he's quite good. One of my questions is, and I wanted to get your take on this because I think a lot of us in this ICM space are kind of wondering, is this going to be driven by us as trenchers, or is there a wall of liquidity coming into the projects that we own? What is your take on, where does the capital investment come from into these tokens? Like, are we going to see one day where like some random family offices are, driving $1 million into a chart, or is it just always going to be kind of us on Twitter and Dex Screener feeling like we're pushing a rope?
That's a really good question. I'll,
You have some
I'll,
big numbers up here on this graph, so I'm wondering it can't be
Yeah.
us on deck screener to hit these numbers.
Axiom.
So my opinion on it is that if you give the right incentives, there is a ton of liquidity that is looking to invest in startups. And kind of how I think about that is for example, if OpenAI said that they were going to do a fundraise on Solana, right? Do you think that there would not be tons of money bridging onto Solana? Of course there would be. The reality is that we're doing two things right now. We're not presenting them with opportunities that are intriguing for the most part. And the second thing is we're not giving them a token value or intrinsic value in tokens that they are willing to risk on, right? Right now, it's all speculation based. You're not buying any part of the company. You're not buying into guaranteed buybacks or any way for the number to actually go up. You're buying into greater fool theory, which is all of crypto in general. I think once those two things change, absolutely, there's a ton of capital on the sidelines waiting to come. I'm not going to say that it's here yet, frankly. I think that we've kind of seen this with like X stocks and some of the other larger cap stuff, right? There's not a ton of demand for that stuff yet. I think it's just a little bit early, but I think as these tokenomic structures evolve, get a little bit more mature, as regulations kind of, we get the Clarity Act and things like that, yes, absolutely. Good startups will be able to fundraise on chain just like they can raise off chain. I see no reason that would change. I'm extremely bullish. It's just right now, I think that where some people are missing the mark, frankly, is that you have to play with the demographic you're given. I know the demographic on Solana. I know what they want to trade. That's what we're trying to appeal to. When the larger liquidity, which we're going to be also like, we're not just like praying and sitting here and like, oh, I hope someone comes and buys our bags. Like, no, we want to bring net new liquidity on chain, right? How do we do that? You have to go and recruit startups that people actually want to fucking invest in. Like, you can't be passive player in that, right? If you're a launch pad, if you're an accelerator, whatever you are, and you're just like hoping that this huge family fund comes and buys your bags, buys your tokens, like you're missing the mark, frankly.
Yeah.
You have to talk to these people.
Is that what you have in this graph here, where you kind of have the different launch pads addressing different parts of the market? Obviously, Pump is right for microcap, fundamental traders, institutional, and then retail. Believe touches the first two boxes, but you have Soar going right through this whole stack. Is this what you mean in this graphic here?
That's exactly what we're trying to display there, is that I don't think that most, angel investors, institutional capital are going to touch stuff when literally your only value prop is, like I said, two things. Team either buying back a fuckload of tokens and making number go up, or alternatively, greater fool theory and someone comes in after you. Like, if you're the last institutional Web2 capital, right, you're kind of the last boat. You're like, you don't have anyone coming after you, right? There's no capital coming after you. So I don't see them investing. What they will throw money at is stuff that gives them some type of value in the actual company underneath it. And that's what we're trying to build. Very passionate about that, and just incentivizing both sides of the coin so that people can come on chain for the first time and not get completely fucking burned, which we've been doing to retail, mind you, for 7+ years from what I recall.
So you talk about this this new standard where someone has underlying value tied to the company. Is that partially what you're introducing here with your new standard that you guys have been working on? And can you maybe explain that a little in detail for us?
Yeah, totally. So really what it's actually based off of what DRP is based off of a standard that actually is used in China. It's called WOFI. I think I'm pronouncing that wrong, but we're just going to go with the word WOFI. So it's wholly owned foreign entity. And so what it means essentially is that in China, your foreign investors cannot invest directly in Chinese companies. So what they do is they do a debt structuring that allows for foreign entities to actually invest. You don't directly own the company. You own this debt structuring that allows you to basically get exposure to Chinese companies since the country does not allow you to invest in them. It's kind of the same thing for SOAR in that essentially we operate as a middleman. We create a contract, a private agreement between ourselves and the company that launches through us, whereby whatever tokens they issue to the outstanding market, there is a debt on their books. It's an interest-free debt. They don't have to do anything with it. And the only time it actually vests is upon a liquidity event, right? So if you have 5% outstanding, we have 5% of the value of your company in a debt against your company. What that allows for companies to do that launch through us is, number one, no one likes debt. They would like to get that off their books. So how do you do that, right? You go and you reacquire tokens off the market when it makes sense for you, which I think is the most important point there, because we're dealing with startups. We're dealing with companies that maybe are just trying to get profitable for the first time ever, right? Do I think that a startup that is $1,000 net positive should be going and buying back their token with that $1,000? No, of course not. Like, it doesn't make any sense, right? But a company that is absolutely crushing it, a couple $100,000 in profit a month, like, they're probably going to want to get that debt off their books. They're probably going to want to get their debt as cheap as possible. So as a token holder of one of our products, are you going to grant their wish and sell tokens back to them as cheap as humanly possible? Or are you going to hold out, be a long-term investor or longer time frame investor, and hope for a liquidity event, or hope for, like you said, some new capital to come in and actually buy your bags at a higher price? So we want to make sure that token holders, although you don't get equity, you don't have any voting rights, you have none of that. What you do know is that there's an outstanding debt. Those tokens are required to fulfill that outstanding debt. And the company, like I said, genuinely will want to get that off their books. But when they get it off their books, like I said, they're benefiting token holders, which is most important for us. So we want to align both sides of the coin, if that makes sense.
And can I even ask a question? This is something totally out of my realm of expertise. When they try to get, let's say, the debt off their book via acquiring the tokens back, can they then use that as some sort of tax benefits for the outstanding companies? So this way they can spend this money, but then pay less in taxes going forward. So it actually makes sense to acquire their token if they have that sort of revenue and profit.
Wow, that is an excellent question that I have not even thought about, but I think you're absolutely correct on my
Only on MTG.
My very basic tax understanding would be that should be some type of write-off. Exactly.
Because I can imagine you raise 15%, you need that money, you accelerate business, and then once you're actually generating profit, you can take that and spend it as a business expense to reacquire the token and basically get back the supply you sold at zero cost basis, right?
And the funny thing is like, you guys are crypto native. I'm very crypto native. I've seen every fucking play in the book, right? Do you not think that people are like, teams are going to leverage this to get their tokens back cheaper? So like, we need to build this new mentality on SOAR of like, hey, listen, like, there might be some funny shit going on. I'm not going to say fraud. I don't want that. But like, there might be some financial engineering to allow for people to, for companies to try to benefit off of you. So like, and what something that we were talking about last night with an investor, which is quite funny, is, and like, you've never really seen this before, but assume that you have a token trading at 20 mil, right? You have 10% outstanding, so that's $2 million. If you raise at 100 mil value, second raise, second round, whatever it is, Series A, would you not go and buy back all the tokens up to that certain number? Like, you would think that teams would do that. If they have the capital outstanding, why would they not move the market up so that they can get basically equity back way cheaper than what the current market is valuing it at, right?
And vice versa, already outstanding equity.
Vice versa, if we launch a company and it's trading at 2 bill and the company's only worth 1 bill, it gives them an opportunity to basically arb the market back down to closer to parity value with their equity and then use that to scale. So like, in our book, when we're talking to these teams, this structuring is quite beneficial on both sides, right? If your token's too low and you have free floating cash, move it up, get your equity back cheaper. If it's too high, arb it back down a little bit and use that for growth and scaling. So I think on the project side, the recruiting has been really, really easy because the structure just makes a lot of sense. It's very akin to Web2 fundraising. You don't go and sell all of your equity on day one when you fundraise. You don't sell all of your tokens on day one when you fundraise, right? That's kind of our mentality. Kind of align both of those, like they should be the same thing. And I think that when we're talking about recruiting in general, like when we're recruiting companies for the first time, like they're going to be like, why the fuck am I selling all my tokens on day one? Why am I doing a fair launch and giving out all of my tokens? It's my company. Like, well, unfortunately, we decided, I guess, a year ago that all of the tokens should be, circulating. And we completely forgot about like all of the good examples of like teams that held a lot of tokens. Like, I mean, look at Curve, right? Like Michael held basically all of the supply. I think he held like 70%.
Good B&B.
Bro, the dude logs in every single day and keeps working. Like, frankly, like he had a huge incentive to keep building his product, and he did. Like,
Well,
when
he
you have no
almost got
incentive,
margin called too. So
well, yeah, I mean, he has a mansion. I'm not going to say like everything's perfect on that situation, but it's a good example of a dude that kept logging in, kept pushing. He had an incentive over time to keep making his product work and make his token work, and it worked out. I mean, there's a lot of examples where it doesn't, but the point is that in my head, and I've said this 100 times, you probably heard me say it somewhere else, good founders will win. Bad founders will lose. There is nothing you can do about it, frankly. But what you can do is the marginal guys that are kind of teetering on which way they're going to go, you can put incentives in place so that they do succeed. When you give a marginal founder 100% of their tokens out on the market, what are they going to do? They're probably going to run the fuck away as soon as they can, right? Yeah. They're just not going to be incentivized. Our model hopefully incentivizes them to do so.
I think it's clear that the fair launch model for these startups just doesn't necessarily work. I mean, we've talked about Dupe and the pains that they've gone through, but there's other examples of this. And then Believe said, oh, well, we're going to have like the ability for you to own half of it in the first block. You know, the other half of the supply gets sniped to hell. And then, you know, they're fighting that distribution for like 3 months while the chart goes sideways. But yeah, I mean, that makes a lot of sense. I want to ask about this graphic here, just to make sure I understand it. This is in the event of an acquisition of what you guys would do for the token holders. Am I reading that correct? And
that's exactly right. Yep. Yeah. So like I said, so the outstanding tokens is just how much is actually in circulation, right? So that goes into the bonding curve, that goes into LP. The custodial wallet holds the remaining tokens. Like I said, think of it is an equity, just throwing that out there, but think of it like equity where you fundraise on a certain portion of your outstanding tokens, the remaining then goes, and that's held by the team because that's the remaining value in the company, right? That 5% is an outstanding debt that is owed directly to SOAR. So in the graphic, as you can see, if an acquisition occurs, assume 20 million, we get 5% of that, which is $1 million, right? We, at that point, have a bunch of different options to drive that value back to token holders. First and foremost, for legal reasons, we do not have to do any of this. Like that is the most important thing. There's a clear break and segregation between our company, SOAR, and token holders, right? We cannot just have dividends go back to them. We can't drive profits back to them, et cetera. We know all the rules there. But in the case of an acquisition, what we can do some type of conversion. So for example, if they get acquired and the company that's buying them says, hey, like, love the company, hate the fucking token, need to get this off our books at all costs, we would say, great, we have a portal for you. We'll put our portion of the acquisition into the portal. You're able to swap 1-to-1 based on how much token you own versus how much value is in the pool. There is no slippage. There is no issues there, right? So it's basically just direct token conversion.
It's like OTC.
Correct. Basically OTC, yeah. The second thing we can do is we can take the $1 million in, say, great, we're going to hold that on our books, but what we're going to do is give everyone $1 to $2 million in SOAR tokens, airdrop to all the people that held this token, right? So maybe we give you a little bit more value, maybe we give you a little bit less, but either way, you're getting a nice payout for holding this token on the event of a liquidity event. We can also do a traditional buyback, right? I don't love the buyback one as much because, like, as we know, if I just throw $1 million into a chart, I'm going to get MEV to death, number one. And then it still becomes like first person to sell, which is not going to be anyone that's a human. It's going to be some type of script. They get the highest value, and then everyone kind of decreases in value afterwards. So, but it is an option. And like I said, the last one is that we can basically keep that just for legal reasons. We'll have to retain that opportunity.
So that's in the case of acquisition. You have two other images here that talk about uncurated and curated. Just so I'm understanding, of the 100% FDV, 85% of in this scenario is off the market, 10% in an LP, and 1% in your treasury. I mean, your numbers
that's missing 4%.
Is this supposed to be 5%?
No. So let me explain this graphic a little bit better. We spun this one up late last night. My bad. Rough math, 96, 100%. But so the last 4% of this is our uncurated. So this is permissionless, anyone can launch through here, right? So
Oh,
this
so
is
you'll
like
have.
the real,
Mm,
this is the real degen side of the platform, right? This is like, it's pump fun, right? For more or ICM stuff. But in this graphic, the one thing that is missing is, and I've seen this a million times, frankly. I remember like Billy is a really good example. If you remember Billy the meme coin, we had a couple friends. I was a pretty big holder myself, and they wanted to go on Bybit. And then the team was like, yeah, we don't have any fucking tokens. Like, we need to get listed, but they want like 4% of supply. And so what ended up happening was, which happens all the time, right, is that everyone comes together and they're like, oh, well, I'll throw, 10 grand of tokens into the pool to get Bybit, and someone else will throw 100K, whatever it is. And you eventually pool all the funds from the community. I really hate that. But what it comes down to is that teams, when they launch, have no fucking clue what they're doing. They don't realize that you need tokens for a market maker. You need tokens for listings, right? All of these things that people just forget. I don't know, or they don't know what they're doing, whatever it is. We want to make sure that does not happen. So there is a 4% that is not shown on the graphic that is reserved for essentially market making and liquidity for centralized exchanges that we hold in a separate wallet. Teams can come to us. They can show us proof that they're working with either a market maker, which we can also, organize ourselves, or alternatively working with the centralized exchange, show us the documents, and then we will release those funds to whatever entity needs them. I just hate the idea of essentially, I think that's actually the right graphic. I hate the idea of these teams that launch. It's like a fair launch, and then, like I said, they're begging the community. A lot of times they can't gather up the tokens, so they don't get an exchange listing, and then all of their momentum dies, and everyone sells, and then it's like a bunch of bag holders.
No, it makes sense.
Yeah, hold on forever.
So real quick to butt in, Tom, Ollie makes a good point here with this comment, and I was going to ask the same thing.
Go for it.
Obviously, these decentralized exchanges, or these launch pads, I should say, like we'll call it LaunchCoin or whoever, bags, when they launch on these bonding curves, typically they benefit from these trading fees going in and out. So they actually have reasons to launch on bonding curves and fair launch, as it's called, right?
Yeah.
Ollie says when you're investing in something like this, you're kind of limiting the speculation and upside, because there is a way to value most of these companies and then value the next raise. How do you guys kind of keep that speculation aspect in trading at a flat curve or a raise at higher valuations rather than a fair launch, as you would say?
Yeah, totally. So we're going to do the same thing. So it's going to launch on a bonding curve. I do think that there is some tangible evidence to say that like a real company is only going to be valued at X number, right? Which is quite unfortunate in terms of speculation. But the thing with our curated side is that we're talking to companies. We have one or two specific companies that, like, listen, I'm not going to say they're going to become a unicorn, but like, I think that they have the opportunity to become a unicorn, which is fucking cool. And when we're incubating and curating some of these tokens, our main goal is looking at things that can certainly be worth $100 million. I would hope some of them can be worth $1 billion. So I just think that the upside on stuff like this needs to be higher. That's the speculation portion of it. And it'll take some time, of course. You're not going to build a unicorn overnight. But the companies that we're curating, the majority of them, I think, in my eyes, have huge fucking upside. And it's not like unfortunately, a lot of the ICM tokens have topped at like 5, 10, 15 million. This is more like 100 million, 500 million. And it'll take some time. But the reality is that you're not investing in a speculative token. You're investing in something that has intrinsic value. It should go higher just because of that.
No, this makes sense. My next question would be, you said you kind of have this more decentralized, degenerate side where you can fair launch, do whatever, or you have your curated side where it's kind of like hand-selected stuff. How do you avoid snipers? Because that's a big thing, a big pain point we've seen, is where it's like when you verify something and people know it's coming and it's pre-verified, well, we're just going to snipe a ball so high. We know it's good. And then you have that pain point Josh mentioned of 3 months of sideways kind of fighting off the distribution here. How do you counteract that?
So we've talked about a bunch of different options. I think one of the cool options that we spoke with Meteor about is essentially they have like their dynamic fee, which is just a sniper tax. That's the only thing we've ever come up with in crypto to stop snipers, right? It's like whitelist and sniper fees. The thing about sniper fees is, and I've seen it since Ethereum days, is that no one leverages the sniper fees to use that as a buyback into the token, right? A lot of times they just pocket it, they run away, and they say, ha, 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 we just took a bunch of money. Thanks for the fees. I think one of the things that we will experiment with, I'm not going to say it's going to work, but use that dynamic fee for X amount of time. That dynamic fee then becomes like a TWAP on the chart over the next like day or two. We're not pocketing the fees, which I think is really bad practice, frankly. We just leverage that to make sure that snipers don't get in super early and hold a fuckload of tokens, right? We tax those buys early on and then drive that back into the chart over the next couple of days. Because like you said, you're always fighting snipers. There's no real good way to fight it other than that option, number one. We could also do like the virtuals model, which I do really like. We would do our own version of it. But I do like the idea of doing some whitelisted launches. And probably as the platform rolls out, as we get really good startups on board, I do think that giving earlier access to some of the patrons or heavy users of SOAR will be something that we explore. Like, for example, if we just somehow got, Sam Altman and OpenAI to do a fundraise on chain, I would not want to offer that to the broader public when we have a bunch of users that trade on our platform a ton.
We'll send you the MCG wallet.
Yeah, there you go.
White
So I think it's all about experimenting. We're going to be very dynamic with how we do stuff. I've never had a launch pad. I've never dealt with a bunch of launches before, so I can't say I'm super experienced in like the backroom stuff of that yet. But I've been in crypto a very long time. I've watched every single launch pad succeed and die for a bunch of different reasons. Sniper's a nightmare. And I think that also like something that a lot of people always mention to me, which no one actually appreciates, is like realistically as a launch pad, who is your customer? Your customer is traders, right? And it feels like a lot of times that gets lost in the sauce and people just don't give a fuck about traders and holders on their platform. And they're always trying to benefit like the teams. And it's like a balance that you have to make. So I think we'll also do a lot of work in terms of making traders happy and giving them fair vals and good opportunities, most importantly.
To be fair, I like the whitelist model.
Interesting.
It's a little gatekeeper-ish and relationship-based, but I mean, like, so is private equity anyways. But like, if you look at how ICM Run was launched, it was, the Meteora team had a pretty, good stake in that. They're all kind of long-term diamond handers kind of thing. We were involved in that, so we're all diamond handers and incentivized also to cover that long-term. But I think that's a good way of doing it. And then there was this kind of long tail of contributors that may or may not have sold it and flipped it because they made money, and then more of the ICM.run tokens were airdropped to the NFT holders. So the distribution got out there and it felt very beautifully distributed. And after everyone kind of sold off their airdrop, that went from 2 million candled rate to 30 million. And so I think the dynamics there, like that's what traders want, is they want, something that has volatility, that it's not just constant distribution all the time. And that news actually makes a difference, or fundamental updates actually make a difference in the chart.
Totally.
So yeah, whitelisting, I think curating launches makes a lot of sense. Everything that gets, sniped, honestly, it's just impossible it's like pushing a rope again.
It really is. No, I think that like I said, I think I'm just going to make a prediction here, but I have a feeling what will end up being our solution is that we will have curated that do not have any whitelists, that are just open. They're probably going to be like lower val stuff that we think it has a really good team behind it. Maybe just a little earlier stage. And then for the really high quality stuff, I think we will do a whitelist. And like I said, that will go directly to people that show that they're not just quick flipping on our platform, which is fine. Like I said, that's part of the game. We've had snipers and we've had minute by minute traders forever. But we do want to build a different psychology here. These companies are not going to want to see like huge 90% downswings like we typically see in crypto. I'm sure it'll still happen, frankly, but we want to make sure that there's some real people that want to hold these tokens for more than 5 minutes on the platform. And like you said, no different than ICM.run. If you give it to the right people, you greatly increase the opportunity for that to happen.
Yeah, Dom, I know Dom's trying to get in a question here, but I just one last thing on this kind of 85% in this custodial wallet. This, to confirm, is other holder. No, this would be everyone that's on this like quote unquote whitelist that it's launched to. I would assume. So this is.
I'll break down this chart real quick if you want me to.
Yeah, please.
Okay, so 1% goes to us. That is our stake in the company. And the way to think about that is that traditionally launch pads do not give a single fuck about any of the companies that launch through them, right? That's the reality. We now, with our structure, become a minority, very small minority shareholder in all the companies that launch through us. We want them to succeed. That incentivizes us to actually do things for them, which I think a lot of launchpads have failed to do, frankly. So we're going to push these companies forward. We're going to offer all the resources that we have on our books to these teams to make sure that they succeed. The minimum market maker and SEX tokens I've already explained. Not every token needs a market maker. Not every token is going to get a centralized exchange. Assume that those tokens are completely fucking burnt unless they actually get the opportunity to list on one of those venues or use a market maker. The LP tokens are what are actually put onto the public market. That's your circulating supply on day one. Those are the tokens that we will trade. So if you do the math on this model, you'll have a 10% float, low float, high FTV kind of setup here. It'll be a low FTV when we launch, actually. So it'll be low float, low FTV. And the custodial wallet represents the remaining tokens that the team holds. The idea for the custodial tokens is that they're all locked for 3 months minimum. We might change that. That's like, might be 3 months, might be 6 months, could be a year, whatever. That's pretty dynamic. But after a certain amount of time, the team has the remaining tokens. They're the majority token holder from day one, right? And they can use those tokens strategically. Now, think about this. If you want to get tokens out of the custodial wallet at any point, you have to give notice. There's a disclosure form on our website that you have to fill out. It gets filed publicly so everyone can look at it. So they can say like, oh, fucktard team one just decided to claim 10% of their tokens, send this shit to zero. But alternatively, if a team that's been good faith operators for 3 or 6 months, you've been holding their token, they're giving you good updates, they go and they claim 1% or they claim 2%, whatever it is. Maybe they even say, we're going to claim 1% over the course of the next 12 months. So 1% every month, right? Are you going to sell off the token? Probably a little bit. But the reality is people are going to say, like, these are good people. They're showing good faith. They probably need some, they'll provide justification for why they're taking those tokens. And then people can get their tokens and they can sell them. They can use them for all kinds of different purposes, fundraising, etc. There's a lot of reasons why we want to give these teams as many tokens as humanly possible. Because once again, as I've said, bad teams, what they'll do, even if you had a fair launch, they would snipe all their fucking tokens and they'd be in 50,000 wallets and they'd be dumping on your head and the chart would die, right? In this case, we basically take the sniping out of it. These teams hold the majority of their tokens. They don't need to spend money on sniping or get everything set up. All they need to do is build a good product and succeed. And the market, I think, will happily allow them to take some profits, build, scale, whatever they need to do with those tokens that are remaining on the books.
Cool.
Hopefully that
Great
makes
explanation.
So I think FaZe here in the audience has a really good question. When launch? So a lot of exciting things that you guys are building around SOAR. When are you guys looking at launching?
So we're working on, I posted this last night, we're working on the week by week time frame right now. Mainly just getting some of the companies that, like, let me put it to you this way. We're recruiting a lot of Web 2 companies, right? We also have some Web 3 companies on the books, great people. The Web 2 companies do not understand like narratives. They do not understand storytelling when it comes to launching a token. They don't understand like socials and how you have to communicate with people. So right now we're kind of crafting these initial launches so that they're high quality, picking the right teams most importantly, but then also building out the story so that it sounds intriguing to the market, right? That's kind of the hardest part we're doing right now. We're pretty much in the trenches doing all of that. And then also some dev stuff we're just finishing up. But yeah, week by week, I'm hoping end of October probably would be my goal.
Got it. And one thing that like us here at MCG, we've noticed from earlier on is that problem, that gap with storytelling. You have a lot of smart people with a lot of good ideas, but they just don't know how to, whether you want to call it play the CT game or just tell their story in such a way to attract investors. I mean, what would be a good long-term solution? Would you say, would you guys kind of just be in the trenches with every launch, or is there something that you guys plan to offer to help them on that side?
Yeah, good question. So how we view it is that at the current moment, the curated launches are going to be fewer. Not going to commit to like a time frame between them, but like I'm assuming like 1 to 2 every week max. I don't want to flood the market with curated stuff. And frankly, if I'm throwing out like 20 curateds on day one, guess what? They're not all curated. Like probably half of them are dog shit. So kind of how we're thinking about it is we have basically, like I said, we're like, think about it like an accelerator. If you were to go apply to Y Combinator, right? We have a form on our page where you can apply. You input all of your info, white papers, business plans, financials, anything you want to add to the platform or to the product, and then you can apply to be curated. So we take all those in, we ingest them, we look at all of those applications, and then we say, okay, this is a pretty high quality project. Let's get on a phone call with them. We want these people to be docs. We want to have an actual face-to-face conversation with them and figure out how good, at least in our judging or our opinion, how good they are as a team, right? From there, if they meet all the qualifications and all the specs of that, we're happy to write the story for them. These companies, a lot of them just aren't experienced, frankly. And I think that's like a big part of why we've struggled to bring good companies to Web3. We don't fucking tell them anything. We're like, oh yeah, go launch a token. Good luck. And then they don't realize like, oh shit, we need market maker tokens. We need centralized exchange tokens. We need this or that. Like we need to tweet every day. Like these teams don't even know. So like, how do we expect good teams or bad teams, whoever, to come here and like succeed on day one when you don't tell them anything? So yeah, a big portion of our business plan is putting a lot of resources behind education. We have a whole SOAR University coming out that one of our friends is working on. That's very cool. We're getting a lot of mentors in the actual product, which I think some of the ICM.run guys we're hopeful will also contribute to that. We really want to educate people. We want good companies, but we also want to make sure that they're not blindsided by how they're launching.
ICM.run, do you have a relationship there beyond Wenzel?
Yeah, so we spoke to Mercy. I think we have a follow-up with Mercy as well. So obviously we have you guys as well. I think you guys are all on the team over there. So
we're the ICM cabal. So
yeah,
that's what Bobby quoted.
You guys are tough to break into, man.
We're actually not on the team. We're contributors, but they have a big, extensive list like that. So,
and the other thing too is most importantly, like we're working on, like I said, like for you guys, for other teams that are actually doing some incubation and making our life easier, frankly, want to make sure that you guys are taken care of in the conversation as well. So it's like crypto's all about community. It's all about working with people. I would never, ever shit on any of the competition. I have no interest in that. I just want to do our own thing, stay in our own lane. I really want, and I'm really passionate about, like, I think ICM can revive Solana in a lot of ways to like more like totally. December of last year, where like everyone was making fucking money. I think I'm hoping that's what kind of lines up for the end of Q4 here. And it's just it's a really cool opportunity. Everything, like all the stars are aligning, frankly. Like, you have Solana talking about it. You have regulation easing. Obviously, tons of money floating around that are looking for some place to allocate. Gold keeps going up. Bitcoin,
gold. Oh my god,
kind of tracking, but not really.
Not really. No. What about? How are you guys looking at regulations? Are you kind of like we see regulations are coming to crypto, right? It's happening pretty aggressively. Are you guys taking a forward-looking stance on that, or are you kind of just waiting for it to come to you, or do you expect it to come and you're kind of positioning for that?
We're heavily, number one, incentivized, but also heavily interested in actually crafting some of the legislation that comes out. So we've had some meetings with congressmen. We're also using some of our other board members to get to the right people. We would like to have a hand in the policy that comes out. I'm not taking a passive view of that at all. I think that I have a very good understanding of where crypto needs to be and where securities laws need to be. And also, like, in general, consumer protection. So, like, this is where I always go back to and I always laugh about. But in this day and age, I know a whole bunch of people that live paycheck to paycheck. They go and gamble every fucking dollar on DraftKings on the weekend on football games. And then they go back to work on Monday and slave all week just to do the same thing. Unfortunately, those same people cannot throw money at startups because of consumer protection laws, because startups are too risky. It's like, well, the negative EV sports betting is certainly more risky and will make sure you lose all of your money over time. I think that we really want to change that. That's one thing that luckily we're positioned. One of my co-founders is also a better attorney than I. And I think we're positioned well to not only, like I said, benefit from the laws, but also do some lobbying, do some backroom contributions to that act to get it where we want it to be, right? There's no, like, it's comical. Right now, you can't launch equity as a token. I know Avi would argue with me on that, but you really can't. Legally, you can't. It's a security. But what you can do is launch a completely worthless fucking token that has no value at all, and then rug people and burn people all day long. And consumer protection laws are like fair game. You know, like it doesn't make any sense. It's so
the irony is disgusting, and it's immoral, and it's gone on for literally 10 years, and I've been around since 2015, and it's just I cringe that it's taken us this long. So
can I ask a question? Josh, it sounds like you wanted to get into something, but I gotta ask. You have a lot going on here. You brought on Nick. You have people lobbying for new regulations and whatnot. How big is this team, and how are you guys funded? Is this self-funded?
Spot on.
Yeah, it's a great question. Holy shit, we have a lot of team members. Something like, let me think about this. 18 people. 6 developers, 7 developers, and front end guys. And then the rest of us are like boots on the ground. Some are doing our content side. Some are doing a lot of us are focused on getting companies in. And then we also have like our founders who are all over the place. I do everything. Like I don't day to day. I have no fucking clue what I'm waking up to. Usually a shitstorm of a billion different things I have to
Naturally.
do. But it's pretty fucking fun. I would say, like, I've worked on a lot of companies, worked with a lot of teams before, been a founder basically my whole life. This is by far the most passionate I've ever seen a team. Everyone loves what we're doing. I think that's why, like I said, lucky to have Nick, but he fit right in because he loves this shit. Like, he fucking loves it. Very excited about that. In terms of funding, currently self-funded, looking at options, 50-50 on if we're going to raise or not. I like the idea of, like, going the Hyperliquid route, frankly, just being like bootstrapped completely. I'm not that rich though, unfortunately. So
well, that's always the goal, right? If you can do it completely, then obviously more power to you. But Ollie has a great question here. He goes, "Are you looking for any useless hires to pay an extremely high salary? Because it looks like Ollie's in the market."
We have no useless team members, but we could probably add one. We might have room for one useless guy that I can yell at.
The personality hire.
Yeah.
There are screenshots of I think these are testnet website. I don't know if you want me to show these or not, but just let me know before I click on them.
I don't know what they entail, but
Nick sent them to our Telegram earlier.
Let me look at what he sent. Hold
on. It looks like these are 2Us for what it's worth.
Oh, interesting.
Just before they get clicked on, I don't know if those were just for us or.
You can share. Just share it. I don't know. I don't think anything's live. I don't know.
Nick Wenzel says, "Let's get Ollie a sniper screener and on-chain sleuth."
Yeah, that's up to you. Oh wait, are they on testnet? If they're on testnet, it's fine.
I don't know. I know if I click on it, it will show on the screen right now. So that's why I wanted to ask.
I think we're good. Yeah, I think we're good. You can show those. Yeah.
Okay. So we got. I like the vibe, by the way.
Thank you.
So like I see a space and defense here. I don't know if these are placeholders, but like
they're just like we threw up some like random stuff last night. Yeah.
Do you foresee like because I think those are types of investments that actually would go really well in crypto is stuff that's in the
especially
defense
with the
industry.
war, right? All the wars.
Yeah,
right
like war is.
Bro.
Like when is the next hand drill?
We have a company literally, no bullshit, that like I would say they're not hand drill. Don't get me wrong. I'm not trying to say that. But their technology is like adjacent to Anduril, to drones. It's fucking awesome. The dude is like a mad scientist. He's going to be launching through us. He doesn't want to raise that much money, which is awesome. He's been very successful his whole life. They're trying to raise like a little bit of capital, but their valve's going to be super fair. Probably one of our first launches, if not the first. huge opportunity. And that's one of those companies, what I was talking about, like building the narrative for these guys. They wanted to do like just general like drone stuff. And I was like, fuck no, this is a war company. Like build this thing into a war company.
On-chain Lockheed Martin, baby.
Exactly.
No, but seriously, like I'm very deep into this. Like I've followed these conflicts going back almost a decade, and like the Ukrainians are building some really interesting technology.
Bro,
Like, there are these 4-member teams in that country that are building like things like drones that are silent, and they hover there and you can't even hear them, and it's like wild. So don't want to go down that rabbit hole, but
that's it's a really
every Western country is going from 2% of GDP to 5%. I know my country's going that way. Obviously, there's demand for defense, but just thought I would throw it out.
War is always ongoing. Unfortunately, I'm such a pacifist. But unfortunately, it's just part of the market.
I know, it's just a part of reality. I think everyone, it's like when the Spitfires, so in Great Britain, in the Battle of Britain, World War II, when the Germans were.
Let's go, World War II. I love history.
People raised money to build Spitfires from across the Commonwealth, which is like Canada, South Africa, India, etc., to build Spitfires, which ended up saving. So there's kind of like this patriotism to defense companies in a way, but yeah.
There's a lot of nuance to it. Though there's nothing like that on chain, which I will add.
Nothing. I have not seen one defense company. Everything's a software product, or like, now we're seeing a little bit of robotics, but everything feels LARPy in that space in terms of crypto companies. So yeah, Tom is War Dogs.
Unfortunately, like I said, I'm such a pacifist, but no, what we want to do, and you can see like just by the top there, our goal is to have a huge spread of stuff. Like, think of it, how I view ourselves is a mix of like, I know it's like corny, I'm just gonna say like Y Combinator is portion of kind of what we're aspiring to be in some regard on chain. And then also like a mix of like Kickstarter, right? Where Kickstarter, you can go on and throw money at all kinds of dog shit. Granted on that topic, you don't get any equity, you don't get shit on Kickstarter. But our goal is to certainly provide people a huge, vast opportunity to invest in what they are passionate about, what they believe in, not just stick to the same old AI LARPs and, like you said, like robotics LARPs and all the other stuff.
Yeah, I like you also have made in USA, made in China. I think a lot of people would be interested in investing in Chinese startups because that's one that's like way like, no access whatsoever. I think
one of our board members is very big in South Asia. Excited to work with him. He's given us basically full access to his book. Runs a $30 billion family fund. So we basically have access to all of his stuff. The problem is, and I'll explain, like, if I don't know if we've got this across yet, but one of the things that I'm like super excited to explore is basically leveraging the high volatility trading and high speed frequency trading of Solana and like the trenches, and turning that into a true fundraising mechanism while also giving people opportunity, right? So if you can give people infinite opportunities to trade this shit back and forth while also fundraising enough money for the team to make it worthwhile, and then also getting to like close to parity with their actual real world valuation, you have a absolute unicorn there. I'm not sure anyone's done it yet, but we're very passionate about putting mechanics in place to do all of those things at once.
You talk about all these different companies and you aspire to be like YC in some senses. Have you guys planned some sort of like demo day in San Francisco to get a bunch of guys out there and just kind of have your pick at them?
Yeah, so we're working on getting some of our one of our founders. I think is going to move out there in the next couple months. Probably once we get out there for good, I think we will do that. The one thing we are certainly going to start doing, just to start with, is I want to do spaces where we're going to do demos of some of these companies and let them talk, let them present themselves. Like, one of the worst things I feel like that we've done with all these launch pads is just like the DD always falls on like the trenches, right? And it's like, I mean, like, listen, Cooker, JS, guys I've known for a long time, like they're absolute savages at it and they feast, like market inefficiencies once again. But if we can actually provide people resources to say like, this isn't a scam, like this is a real company. They've actually worked hard on these documents. Like maybe they're worth something. I want to make sure that we take on a lot of the DD ourselves. I don't think that it's the market's responsibility to try to figure out if something's a rug or not, and if the team is trying to scam you, et cetera. Like, I would like to do that ourselves, and that's why I call it more of an accelerator, because I just think we're a lot more hands-on than most other launch pads would be.
To credit for this show, what we've done and a narrative that I've really pushed is bringing founders on to drop alpha live. And the reason is because the bots on X and the quick click traders, when a tweet goes out, they're beating all the core community. But if you can get on lives and share it over voice to your community, it gives them a chance to actually be the first capital into an announcement. And honestly, like, I don't know if you've looked at our feed, but we've slapped on like 20 absolute home runs in the last like few months, to the point where Bobby's like, MCG is the cabal and like all this stuff. And no, we're not. We're just, our point here is to come in and dig on people, not dig on people, but like really dig in with people to understand and give viewers like an idea of like, you know, is this guy legit or is he not, or whatever, to get a vibe check. Because you can only get so much of a vibe through, you know, marketing and
hardly any. Yeah.
Not that you're doing that.
I'm glad,
just to be clear with everyone, but yeah, that's what we like to do.
And I'm glad you guys are going hands-on with the messaging as well, because that's the other side to it. I mean, there are founders that have come on our show and we're just like absolutely mind blown by like some of the stuff that we find out, but it's only because of the questions that we ask and you know, all the things that they that we have them run through. And even there are certain questions, just like you mentioned earlier in the stream, Tom, where you're like, oh dang, we haven't thought about that.
Yeah.
You know, so it's just those kinds of things that we really like to bring out on the show. And I'm glad that you guys are like going hands-on with them, with some of these companies. So you know, we really appreciate you guys coming on the show. I mean, as we close out here, we know we want to respect your time. Any forward-looking thoughts? Anything that you want the community to know? Where can we find you? When SOAR token?
Yeah, appreciate it. Thanks for having me on. You guys are excellent. Like you said, I know you're the ICM cabal. Can't change that. You can try to deny, but we know what's going on in the trenches. Yeah, I mean, closing thoughts. I think that I'll reciprocate what everyone else is saying. I think that there is enough notable people talking about ICM now that I highly recommend you get exposure. One way or another, there's some really great tokens. Like I said, Duke, Bobby, absolute killer. Had some really fun conversations with him. I know Avi and Kled are doing really good things as well. So pretty interesting stuff going on over there. In terms of our token, probably not coming for a little bit, frankly. I really want to establish ourselves. I also think that we can leverage the token. I want to get token into community hands in a really good format. And I think one of the ways to do that is to incentivize people to be good people in our ecosystem, frankly. I know that like when you look at some of the conversations that I think like Soju and some other guys were having, and definitely Vibu was having, was like in Web 2, you get like penalized for like being a bad investor essentially. And I don't want to do that. Like decentralization is good for that reason, where you can't get penalized. But what you can do is, rather than penalize people, you can incentivize them, right? So I want to incentivize people to be good holders. I want to give them better opportunities if they're good holders, good traders, and just overall, just like I said, contribute to the ecosystem, frankly. So that's kind of how I'm thinking about it at the current moment. There will be a token. Like I said, I don't really have a time frame on that, but I do think that we want to build out a really good ecosystem, and the token will come when it's ready. Pump took, I don't know how long, 16 months, and absolutely crushed it on their launch. So never a rush. It's all about doing it right. You only get one token launch.
On token, I know it's forward looking, and maybe you guys haven't fully fleshed this out since you haven't even announced a date for it. But what would some token utility look like from your end?
Totally. We're going to follow the same exact standard that we're requiring all these other companies to do. So in terms of direct utility, it'll have intrinsic value, because if I ever go and get SOAR acquired, I'm going to have to pay back token holders that are outstanding one way or another. So that's the most direct intrinsic value. And then the second thing is that we want to basically leverage, platform fees, which I'm hoping we have substantial amounts of, Buybacks is radically different, and I'll close on this, right? Buybacks are a lot different when the token that you're buying back is not useless or worthless. We are going to be acquiring tokens off the market strategically because we want more value back in SOAR as a company. We're not buying back the token to make token holders happy. We want to buy it back because we want them back in our holdings so that there's less outstanding debt. It'll function the same exact way all of our other tokens function. And I'm pretty passionate about doing that. So like I said, buybacks is just a totally different way of thinking about it when the token actually has value in my book.
Boom. Boom. I think that was a fantastic conversation. We're going to have to get you back on, Tom.
Happy
Probably
to do so.
once. What's up?
Happy to do so.
Yeah, dude. Once this token's out, once you guys have a few launches under your belt, we will we would love to do that. So thanks for coming on, dude. That was a lot of information. Great conversation.
Yeah, no, I appreciate it, guys. You guys are heroes. It's like the best fucking show in crypto right now. You guys are crushing it. So we'll chat soon.
Thank you.
High praise.
Thank you. It's growing fast.
We appreciate it.
Have a good Tuesday or whatever the fuck day it is. I've lost track.
Tuesday, yeah.
You too, Tom. Take care.
Bye.
Appreciate you.